Welcome back, Garage Gang. It's Tuesday night and the track's on fire. You've got one question burning through the smoke. What the is going on? Is the bull run over? It's chaos. Charts bleeding, fear climbing, suits panicking. I'm Avatar John, the man they told you not to listen to. And tonight, I'm driving through the wreck. Bitcoin, 98K. Dow, red. Government shutdown, week 6. Fed's blind, data's dead. Liquidity's thin. Fear and greed index, 23. Crypto market cap down to 3.46 trillion. When the world panics, the garage gets surgical. You came for answers, and to find out did XXX print today? Yeah, he did. Picks are loaded like nitrous thanks. So smash that like, hit follow, share with your degenerates. The lights are green, the tires are slick. I'm Avatar John, and tonight we let it rip. This morning wasn't a market open. It was a street fight. Bitcoin didn't just dip, it spun out. It ripped through 106,000, slid to 102, and spent the day flirting with that 100K line like a fighter on the ropes. Up, down, up again. Every tick a gut check. Then around 5 p.m. California time, the line finally snapped. BTC dropped under 100K. Quick, violent, final. Liquidations hit like detonations. Ping, ping, ping. Over $1 billion in longs erased before dinner. 9 out of 10 traders gone. Ethereum cracked 3,200. Solana fell to 147. DeFi drained. Meme coins drowned. The charts all looked like flamethrowers. Pure red. No survivors. TradFi echoed it. The Dow lost a few hundred points. The Nasdaq coughed up 2%. Palantir printed a profit and still got punished. Down 8. Margins solid. Contracts climbing. Guidance fine. Didn't matter. Funds are rotating out of the AI darlings they've been riding all year. They're not selling because it's bad. They're selling because they're scared to be last. Even Nvidia, the chip king, dropped 4%. That's gravity, reminding everyone that perfection is already priced in. The AI halo trade's wobbling, and the pros are unloading before retail even knows the song is ending. Then, the macro engine started knocking. The dollar index punched past 100. 10-year yields idled above 4%. Liquidity evaporated. Repo desks went silent. Dealers pretended nothing was wrong. It's like watching a race car idling with no oil pressure. You know something's about to seize. The market wasn't trading, it was bracing. And the Fed? 6 weeks into a shutdown, no data, no compass, no clue. They're supposed to be the pit crew, but right now, they're off radio, eyes closed, praying the tires hold. When the umpire leaves the field, every player swings wild. By sunset, the tape wasn't logic, it was emotion. BlackRock, Fidelity, ARK, billions yanked back to cash. Stablecoins stacked 6 billion deep on exchanges. Capital waiting for someone with guts. Fear and greed index, 23. Extreme fear. That's not anxiety, that's panic on nitrous. But this isn't death, it's discipline. The market's not dying, it's detoxing. Flushing out the tourists so the professionals can breathe again. Pain resets the system. Fear fuels the next lap. In the garage, we don't cry over red candles. We pop the hood, fix what broke, and roll back out sharper. That 100K line's gone. ETH under 3,200. Souls at 147. And every weak hand that panicked just gave us cheaper entry. Now the smoke's clearing. The track's open. And we see who's still strapped in and ready to race. Because in this garage, the engine never dies. It just waits for the next green light. So let's answer the question everyone's shouting. Is the bull over? What do we think? Hell no, not today. Don't twist it. We're not saying this thing runs forever. We're saying this story isn't finished today. If the liquidity valve opens, if the Fed does what it always does, this market's gonna pop again. And when it does, it won't crawl. It'll rip, fast, violent, unapologetic. The kind of run that makes people believe again right before it wrecks them. Most traders will realize too late they got shook out at the bottom. They'll FOMO back in, chasing green candles, forgetting that this isn't hope. It's horsepower borrowed from tomorrow. Because when it finally blows, it'll make today look like a Sunday cruise. So yeah, the bull's still breathing, but it's got a time limit. The system's gearing up for one more lap. Fast, loud, dangerous. We'll trade it, ride it, stay ready. But don't mistake this for safety. This is momentum on borrowed fuel, because when tomorrow finally comes and the Fed can't print another dollar and liquidity runs dry and the headlines stop pretending everything's fine, that's when reality walks back into the room. That's when you find out who is racing with skill and who is just lucky with leverage. When tomorrow comes, the crowd that bought the top will swear they knew it all along. They'll brag about taking profits. But you'll remember tonight, when everyone else panicked and you kept your hand steady on the wheel. Tomorrow's crash won't ask permission. It'll come fast and clean. Every inflated asset, every meme trade, every lazy long, gone like tire smoke and rain. The market always gives one last run to separate the gamblers from the drivers. This next pop is it, the final bull lap before the brakes melt and the tires explode. So when tomorrow finally comes, don't be the one chasing, be the one prepared. In the garage, we don't pray for green, we plan for impact. And when that impact hits, we'll still be standing, tuned, fueled. Ready to build again? So while the crowd screams it's over, the garage listens for what's real. Because out there, beyond the noise, something else is starting to hum. Whispers in the morning, sirens by noon, regulators poking at JP Morgan, TD closing 51 branches up and down the East Coast. Not normal. That's defense mode. You can feel the tremor rolling through the banking lanes. Repo desks tightening, regional ETFs bleeding, dollar flexing. And right behind it, crypto catching the blast. Not because the tech failed, because TradFi flinched first. When banks brace, liquidity hides. When liquidity hides, leverage dies. And that's the chain reaction lighting up the track tonight. The smoke's still hanging, the asphalt's still hot, and just when the market looked ready to catch its breath, the banks started whispering. At first, it was background noise. A few rumors, a couple of nervous traders. Then it got loud enough to make the suits twitch. By mid-morning, it wasn't whispers anymore. It was alarms. JP Morgan steps into the spotlight, admitting it's under a US government inquiry for so-called debanking practices. The biggest shark in the tank suddenly on defense? That's not normal. You could feel the rube shift. When regulators sniff around the top dog, the whole pack starts pacing. Then TD Bank adds fuel. 51 branches closing up and down the East Coast. They call it cost optimization. I call it defensive driving. That's not trimming fat. That's hitting the brakes before the corner. The ripple was instant. Regional bank ETFs bled out $500 million in one day, the biggest outflow in years. Repo desks tightened, credit desks froze, the dollar flexed over 100, and the word nobody wanted to say started echoing again, contagion. Wall Street moved like a driver who just saw oil on the track. Funds pulled back, risk desks went quiet, and the same people who swore banks are solid started making sure their exits were clear. That's what the crowd doesn't get. Crypto didn't crash first. TradFi flinched, banks blinked, liquidity hid, and the shockwave hit everything with leverage attached. When the banks hoard cash, DeFi suffocates. When liquidity hides, leverage dies. That's how it spreads, quiet, invisible, mechanical. Bitcoin breaking below 100 wasn't a crypto story. It was the echo of the banking floor losing nerve. Tick for tick, you could trace it. JPM headlines hit, TD closures follow, KRE and IAT ETFs dump, and a few hours later, the digital market's on fire. That's not coincidence. That's the chain reaction. And then the sound hit, low, heavy, familiar, the garage sound of '08 rolling through Wall Street's marble halls. The veterans felt it first, that hollow thump in the gut that says, we've been here before. Old-timers got quiet, eyes narrowing, fingers hovering over the sell button. They've lived through real wrecks. They know what that smell means. But the young blood, still hunting action, still staring at screens like it's a gain, thinking volatility means opportunity, believing they can outclick a liquidity crisis. They haven't felt what happens when the bid disappears, when the price falls and there's no one on the other side. That's the gap between the vets and the kids. The old ones remember the silence after Lehman. Phones dead, markets frozen, paychecks in question. The young ones only know memes and screenshots. They've never heard a market scream. And that echo running through Wall Street right now, it's not history repeating. It's history clearing its throat. The same rhythm, different instruments. Credit tightening, liquidity fading, confidence cracking. You can feel the vibration under your feet if you stand still long enough. The old drivers ease off the throttle. The rookies push harder. That's how it always happens. One side's protecting capital, the other's chasing clout. But the road doesn't care who's behind the wheel. It just decides who stays on it. So while the echo of '08 hums through the canyons of finance, we keep our helmets on and our hands steady. Because in the garage, we don't panic. We listen. Every sound tells a story, and right now, the story says the track ahead is slick, the corners are blind, and only the disciplined are coming out the other side. The echo's still bouncing off the canyon walls, and if you listen close, you can hear where it's coming from. TradFi's the source. Old money shaking in its seat, new money pretending not to notice. The Fed's still blind. Week 6 of the shutdown. No payroll data, no CPI, no compass. They're flying a $2 trillion jet with the cockpit lights off, and the market's praying they don't clip a mountain. Indexes are sliding. S&P down a point and change. NASDAQ off 2. Breadth under 50%. The rally's been running on fumes, held up by a handful of overhyped AI stocks. Even those are cracking. Palantir, Nvidia, AMD, all red. All proof that perfection has a price. The traders called it healthy rotation. The veterans called it what it is, exhaustion. Under the hood, the gauges are glowing. Credit spreads widening. Commercial paper thinning. Repo rates firming. It's like watching a supercar push 8,000 RPM with the oil light on. Auto loans, delinquencies at decade highs. Mortgages, arrears creeping up again. FHA borrowers sweating first. Consumers maxed out, paying with credit cards to buy groceries. And the banks feel it. They smell it. That's why the big ones are fortifying balance sheets and the smaller ones are quietly locking their vaults. The JPM probe and the TD closures weren't isolated events. They were warning lights. The whole system's tightening its belt while pretending to flex. And that's how it starts every time. Not with a bang, but with a shrug. Confidence cracks before capital does. You can see it in behavior. Fund managers who used to talk opportunity now whisper liquidity. Analysts who screamed soft landing are suddenly reading the fine print. That's not optimism fading, that's oxygen running out. And yet the crowd's still asleep. The young traders are still chasing volatility like it's adventure, believing the Fed's got infinite nitrous left. They don't realize the tank's almost dry. They don't see the puddle forming under the chassis. This is the point in every cycle where the real pros start hedging quietly, where cash starts looking sexy again, where leverage gets called in the middle of the night. That hum in the background? It's not opportunity. It's tension. Markets holding their breath, waiting for the next data print that never comes. So while the echo of '08 grows louder down Wall Street's corridors, we stay here in the garage, steady hands, calm pulse, watching every gauge. Because this is the part of the movie where everyone talks confidence right before the lights flicker. The Fed's still pretending it's in control. Politicians still blaming each other, and the market's pretending to be patient. But patience runs out fast when cash costs 4% and the margin clerk's knocking. That's the lay of the land. Indexes sliding, credit cracking, banks fortifying, retail still hoping, institutions already hiding, the bulls limping, the bears pacing. And the road ahead is dark but wide open. In the garage, we call that a setup, the kind where only discipline survives. Because out here, hope's not a strategy, precision is. While the banks hide behind marble and spreadsheets, the new arena is running wide open, AI. That's where the noise is now, where the young money thinks it's untouchable. And I'll say it the way Tate would. They think they're lions, but most of them are house cats wearing headsets. Every headline's the same. AI will save us. AI will fix it. No, mate. AI's not a savior. It's a turbocharger. If your engine's tuned wrong, all it does is blow the block faster. Look at the field. Apple and Google, two titans that used to hate each other, now shaking hands like boxers after a draw. Siri's getting a Gemini brain swap. Apple admitting it can't keep up. They call it a partnership. I call it surrender. Cupertino Pride just traded loyalty for horsepower. That's not innovation. That's desperation disguised as synergy. Google's Gemma model pulled off the track for hallucinating crimes it never saw. Politicians screaming, lawyers circling. Proof that even the smartest code still runs on human arrogance. Meanwhile, Anthropic just dropped a 350,000-seat deployment with Cognizant. That's not a test run. That's a corporate takeover. Claude's moving into cubicles like a silent assassin, replacing the intern, the analyst, the night shift typist. Productivity up, humanity optional. And out in the culture lane, an AI singer named Xania Monet just hit Billboard. No lungs, no sleep, no record deal, just synthetic talent and server time. People call it progress. I call it the start of digital Darwinism. See, this is what nobody tells you. AI isn't the hero, it's the mirror. It reflects what we are: impatient, greedy, obsessed with speed. We want shortcuts, so we built machines that never rest. Now they're here and they're hungry. Don't get me wrong, the tech's insane. It's the torque curve of the decade. It's what's keeping this bull's heart beating while TradFi limps. But power without restraint doesn't make you a winner. It makes you a crash waiting to happen. Because all this silicon glory still runs on liquidity. And when that fuel runs out, when the Fed stops spraying dollars like champagne, even the cleverest code goes dark. No cash, no compute. No compute, no AI revolution. So yeah, the world's on a sugar high right now, but don't confuse dopamine with discipline. These valuations, fragile. These headlines, temporary. The second money gets expensive again, half these innovations will vanish like vapor. That's why in the garage, we don't chase trends. We study torque. We know hype when we smell it, and we ride it only long enough to cash the slip. Because whether it's a V12 engine or a neural network, the rule never changes. Too much throttle, not enough traction, and you're in the wall. AI's not a miracle. It's a weapon. And the difference between the predator and the prey is knowing when to pull the trigger and when to reload. So let the world worship the algorithm. We'll stay here. Tight crew, tuned engines, discipline first, because in the end, it's not the smartest code that wins. It's the one driven by men who don't flinch. The snow's falling slow outside Harvey's Lake Tahoe, but inside the suite, the air hums with electricity. Neon from the casino floor bleeds through the window. On the desk, 2 screens, 1 mission. This is the garage's Alpine command post. And sitting in the chair, headset on, eyes steady, Triple X. He's running the full playbook tonight. The safe cracker protocol just fed him 5 names. Uranus, Collat, Neet, Chillhouse, Bio. All greenlit, all verified, all breathing on-chain volume. That data's piping straight into Axiom, the cockpit. It's not a scanner, it's a fighter jet console. Liquidity depth, wallet churn, holder rotation, contract history, all glowing like gauges on a dash. One glance and he knows which engines are healthy, which are running hot. He leans forward, filters locked. Market cap under 150 mil, volume above 75K, age over 30 days. Axiom crunches, cross-checks, and drops 3 targets. Uranus, torque clean and distribution balanced. Collat, small cap, tight grip, primed for acceleration. Neet, smooth curve, no noise, real traction. He feeds those straight into Dex Screener for confirmation. Price, LP, flow, all live. No fakes, no ghosts. Then he opens Bullex, the rumor radar. Most traders worship it like gospel. Triple X treats it like a weather report. It tells him what the crowd thinks is happening, not what's real. He watches, smirks, then goes back to Axiom, the truth engine. That's the difference between tourists and operators. The plays are set. Uranus entry 31 to 37 cents. Invalidation 28. Collat around a penny, stop at A5. Neet 18.5 to 19.5, stop 16.5. Chillhouse and Bio wait on deck. Secondary engines, high risk, high reward. Every number memorized, every exit mapped. No FOMO, no emotion, just precision. He adjusts his seat, snow light flashing across his face. Atlas handled the macro sweep. Librarian pulled the chain metrics. Clark flagged the headlines. Now it's on him. The room's silent except for the clicking keys and the faint hum of the fans. In that quiet, the world makes sense. The amateurs talk about patience, he lives it. They talk about luck, he builds it. Down here in Tahoe, the garage doesn't gamble. It executes. Safecracker finds the vault. Axiom maps the blueprint. Dex Screener verifies the steal. Bullex warns of motion. Then Triple X opens the lock. By the time the sun hits the lake tomorrow, the crowd will wake up and call it luck. But luck doesn't live at 5,000 feet. Discipline does. That's the garage. Cold air, hot data, no fear. And tonight at Harvey's Lake Tahoe, the trench is alive and printing. The snow's still coming down outside Harvey's. Soft flakes drifting over neon and exhaust. Triple X has packed up for the night. His screens glow quietly in the corner. Positions locked. Alert set. That's when Lulu steps in. She doesn't rush. She never does. Head of technical analysis for the garage. Sharp eyes, calm tone, and a brain wired for balance. She drops her tablet on the desk and says, "You boys can chase the adrenaline. I'll read the rhythm." I watch her pull up the charts. BTC, Sol, ETH, ADA. Same battlefield, different perspective. The short-term windows still look like chaos, but on her screen, the bigger picture's forming. She traces the lines with a fingertip, slow, deliberate. This was a war zone today, she says. I stayed flat. Too many fake signals, too many people pretending to be brave. She zooms out, 2 time frames side by side. The 15-minute chart looks like a heart monitor. The 1 hour looks like a patient coming back to life. Bitcoin hovering around that 100K mark. Solana holding 150. Ethereum testing 3,200. Cardano fighting to stay above 53 cents. Lulu leans closer. Look, if we reclaim this level, 102 clean on Bitcoin with volume, we're back. The bull's breathing again. Then she taps the lower support band. But if we lose this, if 98 cracks and doesn't snap back, the slide is real. No safety net. That's where gravity does what gravity does. She stands back, folds her arms, eyes steady on the screen. We don't chase it. We let the tape choose. The market will tell us what it wants. All we have to do is listen. That's Lulu, cool in chaos, patient in panic. The rest of the crew calls it instinct. I call it engineering. Because she doesn't trade feelings, she trades facts. And when she says the setup's binary, reclaim or slide, you trust the call. The monitors start dimming, the hum of the rigs fading under the Tahoe wind. Outside, the lake glows silver. Inside, the garage breathes in sync. I lean into the mic, voice low, calm, deliberate, the way we always close a run. Disclosure, none of this is financial advice. Everything you hear from the garage, the levels, the plays, the outlook, it's information, not instruction. We don't tell you what to trade. We tell you how to think when the pressure's on. And remember this, the head of technical analysis in this garage, the one who keeps the wheel straight, is Lulu. She's the chart whisperer, the sniper behind the screen, the reason we survive days like this without panic or pride. When Lulu speaks, the garage listens. When the garage moves, it moves with precision. So as the lights fade over Harvey's and the night goes still, remember the creed. Stay disciplined, stay dangerous, and as always,